Hello and welcome back to FinTech Festival India, everyone. Well, talking about India, around 63 million micro, small and medium enterprises employ more than 100 million people. With its vast potential as a source of employment and equitable development, the MSME sector is a growth engine for the country's economy and overall progress. The MSMEs have the potential to push India towards the ambitious goal of a USD 5 trillion economy. And it becomes crucial to support them with all the means. In a post-COVID-19 world, there are various impediments to the sector's growth, such as lack of formal finance, modern technology, unavailability of skilled workforce, and limited access to global markets. And they can only be overcome with the concerted efforts of a government as well as financial institutions. So our next session will discuss the role of banks in unlocking the potential of MSME. So moderating this session is Mr. Alok Mittal, co-founder and chief executive officer, Indifi Technologies. So Alok is joined on this panel by Mr. Shachindra Nath, executive chairman and managing director, UGro, Mr. Katalin Kauzli, co-founder and business development director, PartnerHub, and Mr. Nishit Sharma, chief revenue officer, BharatPe. So welcome to FinTech Festival India, everyone. Over to you, Alok.
Thank you, Gitanjali, and thanks for joining in, Shachin, Nishit, Kauzli. This promises to be a fascinating session because each of our panelists comes from a very different service portfolio, and then we'll dig into a little bit on how that is enabling MSMEs and what's the role that banks have to play in that equation. But to start this out, I would just request the panelists to provide a little bit more of an introduction of what their companies do, and cover a bit of ground on how they're partnering with banks in delivering these services to small businesses. So Kauzli, if we may start with you, please go ahead.
Yes, thank you very much. So hello everyone, my name is Katalin Kauzli. I am a co-founder of PartnerHub. Our company is based in Europe, but we have taken initial steps to come closer to the Indian market. We have a white label digital invoice management solution that can be integrated into the online and mobile channels of banks to provide value-added services for the SME customers. We chose this strategy to partner with banks in a way that we put our software solution into the bank so that the bank really can provide a value-added service and an outstanding service for their SME customers, which serves an end-to-end need. So from an SME perspective, buying something and then paying something, or just completing an order, invoicing and collecting the payment and the financial management of the small enterprise, it's not a fragmented process, it's one process. So if the bank can provide an integrated offer through the mobile and online or digital channels, I think the bank can be really a good financial one-stop shop for the SME companies. And especially in India, with the e-invoicing coming into place and becoming mandatory for lower and lower revenue thresholds, we think that the SMEs should be helped by the banks with the digitalization issue. So therefore, we think that banks have a crucial role in helping SMEs, both on the digitalization side and also on the financing and payment side. And we also think that, this is a win-win-win situation for everyone. It's good for the bank because it can provide a better service. And at the same time, it is also good for the SMEs because it gets the service. And in the end, it is good for all taxpayers because, the economy is getting wider and more companies can be included in the formal economy.
Absolutely.
Thank you.
Absolutely. Thank you, Kauzli. Sachin, would you like to go next?
Yeah, thank you, Alok. Our company UGro is a dedicated MSME financing company. We look at solving the problem of credit for MSE in two approaches. One, we have a focus on, we focus on select defined sector, subsector, And that is our first primer. And second, we use the data analytics to underwrite the credit. Our belief is that in next 3 to 5 years, SME financing would reach to the level of consumer financing. As you can walk into a store today and get financing done on tap, SME financing with the advent of GST, banking, bureau, and other data source should reach there. Today, it is predominantly, heavily focused on collateral-led financing for SME, and that's a big problem statement. But we are trying to solve. And then we have built a distribution engine which services the need from the smallest SME customer to a mid-sized customer up to 3 crore rupees, and that is we're heavy on physical infrastructure. So we have a branch-led channel. We also do supply chain financing. We also do machinery. We are trying to innovate a platform play wherein on one side we have multiple partners of ours and other side are the banks, and we are trying to bring a big bank to a small partner or mid-sized partner of ours wherein we provide some form of a credit enhancement. So that's all what we do. We are growing fast, but we are limited by what we get. So I don't think so. The opportunity set is small. It is what is our capacity to get money to give money is what is constraining always.
Thank you, Sachin. Nishit, BharatPe has been leading the payment revolution in MSMEs. Would love to get your perspectives on how banks play with you in that space.
Yeah, thanks, Alok. I think BharatPe does 3 broad things. First and foremost, like you mentioned, it is at the center of payment acceptance services for merchants, whether it is through QR code or through POS machines. And second, we facilitate credit to both merchants, which is a large business, and of late through a BNPL product called PostPay to consumers. And third is what we facilitate through our partner P2P NBFCs as an investment product, which is again open to merchants as well as consumers. So while we are at the center of the payments, we act as facilitators for ancillary services like credit and investments.
Understood. Thank you. So it's quite interesting because in the last few years, there is a thesis that is going the rounds that every business is a financing business. And there has been a plethora of MSME SaaS companies, marketplaces, payment platforms. Each of them want to acquire a base of customers and then be able to upsell other services, including credit, but not limited to it. At the same time, we are seeing this notion that banks themselves can go in and provide SaaS-like services in form of invoicing and so on. So where do you see the banks playing the role in unlocking this MSME potential, right? There is a classical definition of a bank, but I think that is getting challenged both from outside and from within. And maybe we can start with Nishit on this one.
Yeah, so yes, you're right. Banks traditionally have been providers of financial services, whether it is payment, whether it is credit or deposits. And of late, the digitalization or the tech revolution has brought the fintechs to the forefront. So fintechs have traditionally or fintechs have been challenging the traditional market. BharatPe is an example where we've started by challenging the payments market. Of course, the UPI wave is something that BharatPe rode. But at the back end of every UPI QR code sits a bank account, and therefore banks are critical in the UPI or payments ecosystem in general. What can be done more by the banks is increase their exposure to technology. We have been facing certain issues in terms of payment settlements. They have been increasingly getting better, but I'm sure there is still significant way to go in terms of payments. Secondly, in terms of credit, banks have traditionally lent only to either the salaried individual in terms of unsecured lending and to the SMEs, as Shachindra was mentioning, it has largely been collateral based. While we at BharatPe have tried to work with banks, I think we've gotten much more traction with NBFCs, and therefore we've been facilitating credit to our merchant base by working closely with NBFCs. So I think there's a lot of scope for banks to get there as well.
Shachin, what would be your kind of vision for what a bank does for MSME going forward?
Well, I don't know. I'm the last person to advise banks what they should be doing. Bank by definition actually tells us what we should be doing. But having said that, I think so. One of the things which I've realized in last my 4 years of this venture, that banks, whether they are private sector, public sector, or any form of banks, they are not focused on MSME. At in the same intensity what some of us are, and the reason is twofold. One, I think so, for at a scale of bank when it has to grow, putting the same time and effort, they have much more bigger opportunity, and that's why they get focused on that. So if a bank of a large size, which has say 50,000 or 70,000 crore of asset, and it has to grow at a base of 15% or 20%, it is almost 15,000-20,000 crores. Now, a company like UGro with 1,000 crore of capital is saying by 2025, we will be 20,000 crore. And that bank has to do in, say, 1 year time or a half a year of time. And that means that they cannot do by just focusing on MSME. So that's why their focus continue to be everything else, wherein return to effort ratio is higher than MSME, right?
Mm-hmm.
So in longer run, this may be more resilient. Second, I think the general perception within the banks is that MSME is a volatile, it's a loss-making proposition, customers are bad, and we don't want to do that. And that's why I keep saying that probably banks should use other intermediation to access the MSME market, because this country can't survive when MSMEs don't get credit and other things. And that's why banks have to systematically think about using either NBFCs or FinTechs or payment platforms to funnel liquidity to them and provide credit. We are at early days of that. There is a lot of hoo-ha about it, which is co-lending, other things and all of that. Real results have not come, but I'm quite confident that it would start happening very soon.
I think that's interesting. At some level, what both Nishit and you are saying in some sense is that the fintechs may start to provide the customer-facing layer, whether it is payments, where the top 3 UPI platforms are all non-banking platforms and already command the lion's share of the market. And then banks may provide the infrastructure, the rails, the capital, and enable some of these front-end players. So I think at some level, this is a battle for customer ownership. Kauzli, your business is interesting because you are going and telling banks that they should own the customer interface, and if not through payments and credit, then they can own the customer interface through software. Why, in your mind, should banks be the software provider to MSMEs? This is a new role for banks to play.
Yes, so definitely, if we are getting into the e-invoicing space, this is something that the bank should need or must decide that it wants to get into this space, because it's like a non-core banking offering. And we also have a kind of a view that it will not be each bank who decides to do this. So there will be different strategies for different kinds of banks. And I think what the bank should be prepared is that it should have the IT infrastructure and service layer to serve different kinds of customers. So one segment can be the SME customer directly, but other segments should be the MBFCs, the payment companies. So in our view, it will be a diverse market. The bank should be prepared to serve various customer segments, software providers, SMEs, and so on and so on. And it will be mainly the bank strategy, what the bank decides to do. So if some bank has a very strong SME strategy, then it naturally will decide to build a customer-facing application. If the bank has a more corporate focus or retail focus, then it will not necessarily do a customer-facing application, but for sure, I think it must have the infrastructure to serve the other players, other market players as well. Another thing I wanted to touch base is that the SME segment has been traditionally underserved because of the low profitability of the sector, but it also changes with the emergence of digital offerings and the enabler technologies becoming available, because banks are able to set up solutions for the SME segment, similar offering to the retail market, but still this will be solutions that can serve the SMEs very effectively in a digital way, because as a bank, you don't have to take the time to talk to each SME. SMEs can serve themselves digitally. So I think that's another important factor that the bank can take into consideration when thinking about serving the SME segment.
Yeah, I think that's a great point, because SMEs have always kind of lied in this no man's zone, right? They want the service of a corporate, they'll pay like a retail customer, and their risk is probably higher than both of those. And partly banks have taken a service approach to these, right? So relationship managers walk into my branch and I'll give you credit. I think that transition from taking a service approach, which becomes hard to scale, puts the pressure on profitability, to taking a more product-oriented approach to servicing SMEs is what some of the newer fintechs are bringing to the table. Sachin, are you seeing trends of banks going down that path of creating relatively well-crafted, standardized products that can be sold through a channel?
No, not really. As I said, that depending upon who you talk to. So at least in India, you can divide banking in 4 parts: public sector banks, private sector bank, which are new generation, and old generation private sector banks, especially the southern part of our country, small finance banks, right? So, and each act and work very differently, right? So we have, as you know, that for MSME financing, Reserve Bank created 12 banks, which are all small finance banks, except 2 of them. Rest all remained as microfinance company and not been able to convert into SME financing business, and is struggling, and they are, now trying to do that on a path. So I think, so as I said, that banks, my personal view is that banks, by definition, banks model is so diversified and they have to service so many other things. And in India, actually, there is so much of regulatory overload is also there in terms of what asset they can do, what they cannot do, how much, they should do. So they don't focus on the basis of what is called economic value proposition. But most of the banks are driven by whether their portfolio is matching the PSL requirement, not matching the PSL requirement, why they have to do agri, why they have to do all of that. So it is very difficult for them to, create that agility of, customizing product to a customer need and being able to do that. I think, so look, this is not just the bank, it go anywhere. It is always said, in democracy, smaller the state is better managed, bigger the state is poorly managed, right? That's why we keep bifurcating more number of states. Smaller the municipality, it is better managed. So I think, so is the size and its own problem. And if that would not be the case, then people like you and me would not survive. We exist only because of that inefficiency, which is structural in banking system.
Interesting. I think, so we talked about this product versus service character. We talked a little bit about the customer ownership element of, how banks and fintechs are interfacing. I think the third key element there really is the risk element, right? And again, whether it is merchant acquiring businesses, and taking the acquiring risk, or whether that is the credit risk of a small business, it seems to be that the new age fintechs are willing to take much more of that risk. And solve for that risk, and banks at some end are becoming infrastructure or capital provider. Now, that's not a classical role of a bank, right? Capital and risk must flow together, and there is this divergence that is coming in between capital and risk. So Nishit, how do you view this equation? Where do the two converge. Earlier, banks used to use business correspondents as a service channel. Today, some of the fintechs are almost talking about banks as service providers, but the fintech as the principal. So how are you seeing that equation evolve?
I think that is absolutely sort of becoming the case of late, and it really comes down to the point as how banks think of themselves as service providers or as product providers. So the fintechs have been doing productization of the services, and therefore are better placed to market these services to specific niche audiences. Like, for example, in the case of BharatPe, it has a niche audience of merchants. And these are small kirana stores, pharmacy outlets, and stuff like that. So, so it is more like programs that banks can create for fintechs such as BharatPe and others, and therefore sort of bridge the gap between the service and the product. There is definitely scope for both sets of organizations to work together, and eventually banks can come up the technology curve and maybe in-house a few of the products that fintechs create for them. But I guess that is a road that will have to be traversed in the time to come.
Yeah, that's interesting because the consolidation wave in this sector still hasn't started, so it remains to be seen. Where the eventual winners lie. I'll just take one of the audience questions. So are we agreeing that banks providing credit to MSMEs should be through intermediaries, through different products, bank guarantees, loan against orders, whatever those products are? But is that the general conclusion? Or if you ask a banker, they are not looking at this. They're saying, no, we want to own the customer. So what's the future of lending to MSMEs as far as banks are concerned? And Kauzli, maybe I'll ask you to go through it because you might have a slight bit of a counter view on this.
Yes, I think in the long term it will be, the margin play will be decisive, and the how you say, the bargaining power of the partners, versus bank versus fintech, and how they can get along, and what is the profit model that they can agree on, which is sustainable. Because if you have like smaller players, then the bank can still argue, so it's a comfortable position. But once a big tech player comes into place, then the bank can be in an uncomfortable position and realize that it can easily lose like 40-50% of the transaction margin or the profit margin. So I think it might be the situation that banks are not in a position to come to the forefront because of the technology requirement or the time lag in the developments. And also, I think that this is a comfortable situation now, but it can change in the future. So I wouldn't say 100% sure that this will be the case that only FBSCs will provide credits. I think it will be a diverse market, and as I said, it can be different from bank to bank, because each bank will have a different strategy and different focus on products and customer segments even.
No, I think that's a great point. And, the way we look at it, and we do a lot of ecosystem-based lending, right, I think fundamentally the nature of intermediation that is required to make credit successful is changing, right? Banks acted as pure financial intermediaries, and that is the role that they continue to play. Big techs or other, MSME ecosystems, right, whether that's a payment ecosystem like BharatPe or that's a marketplace like an Amazon or Flipkart, I think they are providing an intermediation which has rich data and agile knowledge of the SME embedded in them. So the way we look at it is, it doesn't matter it's a bank or a non-bank, but the intermediation will have to be far more data aware, right, and commanding a customer interface on a high frequency usage basis. So I think that to us seems like where the market is headed. If banks can play that, if banks can, take up Kauzli's platform and get into the flow of invoicing, then they can own that interface. If not, then whosoever owns that interface, probably will own lending. Sachin, you referred a little bit to the small finance bank piece, right? And one question that I'm intrigued by is, we've been saying, how do banks unlock? And so inherently, we are tying to the current notion of a bank. How do you see the banking regime itself potentially adapt to these changes, right? SFB was one experiment in that area. What are the licensing constructs would come up that redefine, what a bank really means to us?
So, as you know, there was a point in time wherein the central bank had this view when there are a few sets of external, people came into the leadership of our central bank, that differentiated banking license would be most inclusive way to expand the reach of banking in India, right? And that's why three set of banks were, large banks, wholesale, universal banks, small finance bank, payment banks, were created. And then we had this on-tap, universal bank license regime came up. Then you have on-tap SFB license regime came up. But fact is that that experiment to a large extent failed because the impact which was expected to get created didn't happen. We have seen that except one bank, even few of the universal bank license could achieve the objective for which they were given the licenses, and so as the SFB and payment banks, are neither here nor there, because actually you don't need any more a bank license to run payment service, right? It is now democratized to an extent. Without license, you can run a payment service very effectively. My personal view is that, we are now in a regime that for a few years, at least 5-7 years, given that a few of the difficult times which we have seen in banking, no more experimentation in banking would be done. So it will remain status quo, and we have to go through a full cycle when new thinking around how to evolve banking has to come. Digital only bank, all of that. But I don't expect any regulatory changes. There is definitely a need, right? I don't deny that, but there is very less regulatory appetite to service that need.
Understood. Nishit, the way we've seen BharatPe evolve, has been slightly different, right? So within the BharatPe umbrella, you mentioned you offer payments, you offer credit, you also enable savings for small businesses. So in some sense, you are doing several elements of what a bank does for small businesses. And at the same time, you've then partnered in acquiring a bank. Run us through how you've thought about the banking play evolving over time.
I think it stems from what you just mentioned a short while back about who owns the data and what you can do with the data and how well you can process it and service the customer. So the agency who owns the data, or rather who has a steady flow of data, will be better able to own the customer experience. And BharatPe sits at the juncture of a lot of data, because we enable a lot of offline merchants to accept payments digitally. Now, payments as a service generates tons and tons of data. For this, because of this, we've been able to facilitate credit. The bank partnership is sort of an offshoot of that same thought process, that we have to and it's a small finance bank, so it's pretty much the services that we've been offering in a partnered manner now can be offered in an in-house manner. So the bank that is getting created, called Unity Small Finance Bank, will have a better sort of access to data, at least on the small merchants, and it's going to be since it comes with BharatPe's expertise behind it in terms of processing payments as well as facilitating loans and investments. So that's the whole ethos that we experimented with a lot of services or a lot of core services for banking, which is payments, credit and investments, and we found a sweet spot where an SFB can operate. Now, by stroke of good luck or I think the regulator chose that yes, there is this combination of Centrum and BharatPe is worthy enough to be allotted a small finance bank license to turn around a bad bank. This is going to be probably the next forefront, and I think that more such combinations of fintech plus bank will emerge going ahead.
Understand. Kauzli, as you look at your product suite, today you are enabling banks to do invoicing, and that brings in rich data. What do you think is the roadmap for banks? Besides invoicing, what are the kind of products or categories where banks should be going to make sure that they can retain data awareness as well as control of the customers?
I think there is we need to distinguish between the short term and longer term, because as far as I can see, on the short term, even getting invoicing is such a thing that very few banks are willing to take. So to get more and more services into your existing service portfolio, it's not easy at all. So I think if every bank does invoicing or starts working with invoice data, that's already a good thing. And I would like to highlight that if the bank wants to work with invoice data, it does not have to do necessarily invoicing, because you can get invoice data from other data sources as well. For the bank as a capability, the access and to work with invoice data very effectively is the key capability. So our platform also enables that, but you don't have to imagine that every bank needs to do invoicing. No, the bank just needs to get access to the invoice data sources and put it into their own processes to have the digitalization of the backend processes. So I think that is like a big thing already to incorporate into the banking space. On the longer term, and I think this will be really longer term, digital identity, it's an issue that the bank can also start incorporating into their business models. And this is basically because of the trust of the companies and because of the emergence of fraud on each area of our lives. And the banks have the capital, and they are also already engaged in fraud management. So I think on the long term, this could be a new area for banks. But the first step is the most important step that the banks can do now.
Absolutely. Again, we'll take a couple of questions from the audience. So Mr. Raghuram is asking, why are banks not aggressive or as aggressive as fintechs and NBFCs in selling loans, using social media to acquire customers, and so on and so forth? Any views, Nishit?
Yeah, sure. I think it's a question which is probably answered in how returns are being viewed by both sets of entities. Banks work on a return on asset sort of framework, whereas fintechs work on a return on equity framework. So where fintechs or of the late actually lack of returns on equity, but essentially it's a cost of service piece. So a bank has legacy costs, whereas a fintech has got, since it's tech enabled, it's got very little cost of acquisition as well as cost of service. And therefore banks are unable to underwrite large tickets or rather small ticket sizes. And therefore, as was mentioned earlier, banks they choose to sort of remain in larger segments, whereas the fintechs and the NBFCs are able to go down to the bottom of the pyramid, maybe not to the bottom, but at least to the lower layers in the pyramid, and hence able to get the audience that the banks can't serve.
Yeah. I think this is interesting because, for example, at Indifi, all the small businesses we serve have accounts, bank accounts, right? Which means that they are an existing customer of some bank. So at a system level, banks don't even need to do any of the social media stuff. They already have the customer in their system. They already have information about those customers through the current account exposure that they have. Right. So the challenge with banks is not how to get people to walk into the door. The challenge is people have already walked into the door, and how many of them can be served for various reasons that Nishit mentioned, the cost to serve, can you risk profile those customers well, and so on. But customer acquisition is a problem that fintechs have. Banks, presumably don't have that problem. Sachin, the comment you made around the banking license and the kind of banks, there's a question around that the whole idea of payment banks was to only handle payments, right? But now non-licensed fintech players are in some sense dominating at least the customer front end of payments, right? So where is then there a differentiation that these payment banks have with respect to small business relationships? And where will that differentiation kind of arise for other categories of banks?
No, actually, that's a constraint for payment banks. So remember this, that non-licensed payment bank handling the payments are getting capital and getting valued and being able to expand because they own the customer. And actually, payment is not making so much of money. The promise for cross-selling or upselling, what you say, is what is, because of which they are being able to command capital and grow. Now, unfortunately, as a licensed payment bank, you can't do that. So a payment bank might own 1 million customers, but cannot sell credit, or it can sell credit, but in a very difficult or wishy-washy way. So actually, that is the challenge, and that's why when I think the 5 or 7 licenses were granted, only 2 or 3 of them started, and you will see that at least one or two of them would move to a pure credit platform from a payment bank. As soon as the 5-year would get completed, they move to credit as a small finance bank. Except that one of them, which is telecom, they won't be able to get a banking license. So I don't know what they would do, but it's okay. This is a small piece for a big giant, so it will continue to run. But otherwise, payment banks have, especially after UPI, payment being a completely democratized product. The real reason of having a payment bank is lost. Is whole rationale, is my view.
Understand. As we talk about the portfolios of MSMEs, right? I think we have spoken a fair bit about payments and credit, and potentially as vast. There are other categories of financial services that we haven't spoken a lot about. Including insurance. Most small businesses remain underinsured. Even treasury or wealth management. Do you see opportunities in those areas, and why is it that those areas so far have not captured the imagination of either the banks or the fintechs?
Yeah, if I may say, I think so. Beyond, actually, the fintech should think beyond finance when it comes to MSME. So it is what is most important, and where the MSME would value the proposition is service element of other than finance, right? Because that is easily available. So that's why this aggregation of as there are certain platforms in India which also provide logistic services or purchase solutions. So once you take it forward from there, so if if I'm a furniture manufacturer, if there is somebody who can provide credit and can also find me buyers for suppliers of merchandise or architect. So the whole aggregation of service offering and credit and financial services added to that is what would make proposition, obviously, but that's a big goal, right? And nobody is thinking. So people are still very segmented. So a payment platform would start thinking only from cross-sell from payment to credit to insurance to wealth, not go beyond that, which is the much more needed for MSME, because they can't go to a big consulting firm and say, go, please provide me that service. But a large player can provide in a granular way some kind of customized services to them, and that would really help customers.
Yeah. I think this is interesting because it seems like one blind spot that banks have had and now fintechs have is actually the product mindset.
Yes.
Rather than a customer segment mindset, right? So what if you went after just the exporters? and did everything that you could do for exporters, cutting across financial services and non-financial services. And that's where kind of, I think, the general narrative of neobanks starts to shape up. Of are banks going to have to fundamentally, or non-banks, are going to have to fundamentally organize themselves around customer segments rather than organize themselves around specific products or services. Kauzli, I think you wanted to make a comment on that.
Yes, I have a comment on that. So the lack of, a complete offering can be viewed like as a, product versus customer problem. But the problem on the IT level is like the integration problem and the lack of data interoperability. So if, there are two players, for example, let's say there is a bank and there is an insurance company, and they decide to serve a customer segment, then they need to integrate their services. However, if the SME will need, products that, for example, this insurance company doesn't have, then it would need to add on various partners. And, the integration costs are very high, so it's not necessarily happening. And because of the data interoperability is not there yet, then a database ecosystem cannot come to life at the moment. For payments, there is already the data interoperability. For invoicing, with the introduction of invoicing, there will be interoperability. But for other segments, you still need to integrate with partners individually. And the partners are unwilling, so the small partners are unwilling to integrate with your system because it's too high cost. So the bank or the big player should incentivize other players to integrate. So I think that is the reason why it has not happened yet, or it's not happening yet. It will develop in the future when other sectors will discover the value of interoperability, and each sector will just describe its standards towards interoperability.
Yeah. No, absolutely. And, some of the banks are taking that leadership in enabling APIs and making sure that they can leverage the ecosystem economy and make sure that they are powering the services for a wide variety of front-end interfaces. So that clearly is one of the strategies that is being pursued by banks to remain relevant in the fintech world. I know we are coming to the end of our discussion time. In a quick 30 seconds, I would love for each of you to talk about one MSME use case that you think continues to be underserved, and I would request you to go for one that you are not engaged in. So when you go talk to your customers, small businesses, what are they saying they need that isn't easily available out there? And maybe Nishit, we'll start with you there, if that's okay.
I think there is amongst the MSMEs, while credit continues to be a big use case, but the one thing which probably they want in addition to credit is value added services or a sort of a bundled offering. So they don't want to go to multiple platforms for seeking multiple financial services. A bundled offering which offers maybe 2 or 3 relevant services, and for each industry it will be a different bundle.
Sure.
But they want a product that gives them more than just one.
Great. Kauzli, what are your customers telling you?
So we are an SME, so we will, say, or I will say what we would actually need, and what we are pursuing is this: that you have a very good offering for your, payments, financing, and invoicing needs, packaged together with real-time information provided by one service provider. I think that's a value that you don't have to talk to anyone, you don't have to switch platforms, so you need to have it in one place, packaged in one place.
Shachin?
So I think one of the common things which I hear, that in order to scale, and I'm just saying this as a non-bank, in order to scale, we try to put templates around us which suits us, not the customer. I'll give you one example. A very close friend of mine, his daughter is a young entrepreneur, and she got an order of 70 lakh rupees on GEM, which is government e-marketplace. And obviously, we keep propagating ourselves that we are a creator of GEM Sahay. We have done this, we have done that. So father called and said, my daughter got a 70 lakh rupees order. Can you finance? I also said, yes, we have a platform. Let's go ask her to go and apply on that. Next day, he said, no, but it's not happening. Then I asked somebody in our team to please talk to them. And then after that, I forgot. 15 days later, I spoke to him. What happened? He said, no, your team told us that on GEM side, they can only do up to 5 lakh, but she got order of 70 lakh. Because we have a product, which is, we have been talking about product, but the need was the poor girl had an order of 70 lakh rupees, which was a Delhi government order. She could have supplied the material, got money, and it was completely safe. It was a published book order. But we said only 5 lakh rupees we can get. So,
no, some great insights here. So, I want to bring the session to the close, and I want to just thank our panelists. Some great discussion and great insights from the practitioners. I think there are lessons both for fintech and banks in the discussion that we had, and maybe the future does revolve around an effective collaboration between both those entities. Thank you so much for joining us. Gitanjali, over to you.
Thank you so much, Alok, and thank you, Shachindra, Katalin, and Nishit for joining us today. It's been a very interesting session. Thank you so much.
Thank you.
So,
Thank you.
with this, we're moving on to our next panel. So to join us, go on the agenda and click on the next session. Don't forget to click on People tab to meet with our partners, sponsors, and other delegates on the platform. We'll be right back with you.
5 मिनट में अकाउंट सेटअप और ट्रेडिंग शुरू। हाँ कर सकते हैं। नहीं कर सकते। लगी शर्त और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender, and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there's life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Welcome to Fego, a pioneer in the world of intelligent open finance. With our full-stack open finance platform, we enable companies to understand their users' financial behavior across various use cases, making finance engaging and actionable. Fago's developer-friendly product stack helps clients with friction-free user onboarding and authentication using trusted account information. Connect and aggregate your users' banking transaction data from any source, either any of the account aggregators or directly from any core banking solution at flexible intervals. Enrich and categorize transaction data using machine learning algorithms to extract deep behavioral attributes of your users. Understand and act on real-time insights powered by your users' behavior for a variety of use cases ranging from lending, wealth, income verification, frauds, to even branding and marketing insights. Engage with your users by embedding our personal finance management SDK in your existing user-facing app to push positive financial habits and personalize financial insights to your users. If you are looking to engage or understand your user base's financial behavior to take informed decisions, Fago is your perfect partner. With the complete Fago suite, you can now capture what drives your users at every stage of their journey and use it to drive your growth. Plug into Fago and let us do the heavy lifting for you.